American rent growth keeps trending down, down, down. If you're a landlord, should you be concerned? I mean, this is your income. We're going to look at that. Also, which regions of the nation actually have contracting rents, not just slowing rent growth percentages, but rent amounts that are dropping. Let's investigate it and the reasons for it. So settle in and watch this video until the end and you'll know what's happening and where we're headed next. I even discussed the 2030s decade. Hi, I'm Keith Weinhold, Get Rich Education founder, active member of the Forbes Real Estate Council, and 20-year real estate investor. I also host the weekly Get Rich Education podcast. That audio first experience is different from this show. You can listen and build your real estate wealth while you're driving or exercising. So be sure to download Get Rich Education for free on Apple Podcasts, Spotify, or the Get Rich Education mobile app. It's not just your out-of-control Trader Joe's bill. Okay, everyone's felt inflation, even your tenant. Now, historically, rents bump up at about 4% annually, and I mean, that has been remarkably consistent over the decades, like almost as steady as your morning coffee routine, 4%. So let's take a look at this chart from CoreLogic. Since 2005, you notice that, okay, indeed, about 4% is the steady baseline of year-over-year rent growth, but what really grabs your attention are two distinct aberrations that occurred in the past 15 years, 2008's global financial crisis and 2020's pandemic. Even during 2008-2009's housing downturn, rents only fell 3-4%. And back then, I was a knock on the door and collect rent fourplex landlord, and my rents didn't fall at all back then. And in 2022, the pandemic made rent growth spike by 14%. But yeah, rent growth is stalling right now. Note that rents are not falling on a nationwide scale here. It's just that they're back to, yep, their historic 4% growth rate. Now we'll look at the prospects for falling rent amounts soon. Note that this chart is for single family rent growth, but you know, apartment rent growth, it's just been remarkably similar over time, and it really just mirrors this chart year after year. But if we weigh that 4% across classes, you'll note that low-end rentals are up 6%, and high-end rentals, the nicer properties, well, they're only up about 2% in rent growth. And that makes sense. As you think about years of high inflation and a shortage of housing, what drives demand for those entry-level rental units? People just need to get a roof over their heads. But why is national rent growth really slowed today? I've got three big reasons, and then after that, we'll discuss rent growth's future. The first reason why rent growth has slowed from 14% to 4% now is that number one, pandemic moves created 2021's rent surge. People wanted to decouple as roommates in the midst of a contagious health crisis or even move out from their parents' home. Well, that sense of urgency to pay higher rent for a place, I mean, that is gone now, okay? Those people are settled. Desperation has cooled. The second reason that rent growth has slowed is that inflation has increased tenants' other expenses, and at some point that limits what they can weather in rent increases. Hey, they shop at Trader Joe's too. That's called an affordability constraint. And the third reason rent growth slowed, it actually has to do with mortgage interest rates. Yeah, see, when single-family homeowners got low mortgage rates secured a few years ago, well, they're smart. Even if they move out of that low-rate single-family home, their rate is so low that they don't want to sell that home that they just vacated. Well, more homeowners are choosing to rent out their former homes, not sell, for that reason. And an increased rental supply, well, that helps keep rent growth in check. They are the three big reasons that rent growth has slowed down. How bad will it get? How much will rent growth fall? Well, again, note that rents aren't falling. The rate of rent growth is. Now, we'll look at the part of the nation where rents are falling soon, but rent growth is just back to 4%, that long-term historic norm once again. But yet, trends in motion tend to stay in motion. So not only will rent growth continue to fall, I think it will, but will rent amounts actually go negative? That's the concern for a landlord here. Hey, go ahead and drop a like or a comment on this video. If you approve, I'd really appreciate the like. The answer to will rent amounts go negative is no. I don't believe that in any significant way residential rents will fall on a nationwide basis, and I've been investing directly in real estate through 2 recessions now, and I've got 5 big reasons for no expected national rent drop. The first reason that it's exceedingly difficult for national rents to fall is just look at history. Look back at this chart again. Even during 2008's severe and toxic housing downturn that was a once-in-a-century event, well, rents only fell 2 to 5% then, not so significant. Secondly, we still have a vibrant job market, and there have been high-profile tech layoffs, but overall, we have an astounding 1.8 open job positions for every available worker. Well, that means that employers, they have to compete against each other to pay higher wages to entice employees, your tenants, to work for them. And in fact, wage growth recently exceeded CPI inflation. Potentially then, that is a real increase. And the third reason that rents are resistant to drop is that even if there is not just a recession, but a bad job loss recession, which few expect anytime soon, one reason that rents stay resilient in recessions is, what do people do? Well, people tend to double up as roommates. Fourthly, rents commonly rise even a touch during recessions is that, well, you might wonder how that can be. It's important to remember that housing markets and classes are not static. All right, well, you might wonder, well, how could you possibly raise rent from, say, $1,700 to $1,800 in a recession? Well, what happens is that some renters, they step down a class, all right? So they might move from a $2,500 a month unit into your $1,800 a month unit. They step down. Yeah, that's a measure of austerity. That's something that can happen in the event of a downturn. By the way, no one truly knows if we're on the brink of a recession or not. And recessions, they're just a normal part of the business cycle, and they occur every 5 years on average. And the fifth reason that national rents are resistant to fall, and this is going to be with us for the entire 2020s decade, and even into the 2030s decade, and maybe beyond that, it is already baked into the demographic cake, and that is the fact that overall long-term housing continues to be in short supply. America's millions of homes undersupplied, making housing demand exceed supply in so much of the nation, and that's for both homes to buy and homes to rent. But sort of like anatomy, there are just so many ways to break down real estate, so many ways to dissect the frog here. Redfin parsed the rent change by region. Now, take a look at this. Since the pandemic started, as this goes back to February 2020, rents fell in the West and rose everywhere else. And this is largely predicated on the late pandemic migration patterns and also the fact that the West built lots of multifamily. Midwest rent growth, now that is persistently steady. I mean, look at that blue line. That's how the Midwest is. I mean, whether it's changes in long-term price or rent, I mean, decade after decade, the Midwest, I mean, that is like as stable as the clover honey in your pantry. And we're talking about Ohio out to St. Louis, KC, and up to Milwaukee and some of the Michigan markets. So see, after years of high inflation, the Midwest's lower prices and lower rents, they really look affordable to renters today. And this is emblematic of why we invest in what I call stable markets, the Midwest, the Southeast, and the inland Northeast. That's what we do here, always avoiding the volatile West Coast. I mean, the West Coast, that has less cash flow for you per your invested dollar. Back at the chart here, you'll see that down just 2%, really even landlords out west, they're not faring that badly. It took a once-in-a-century pandemic to make rents spike last year, and the prevailing takeaway is that over time, rent growth is usually as steady as a metronome. It's simply reverted to normalcy, and there's just certainly nothing bombastic about that. The Midwest and Southeast, they are 2 areas that have the best ratio of what's most important to you as a real estate investor: a high rent at a low purchase price. And we recently helped a viewer like you buy a fully rehabbed duplex in Southwest Ohio. This one's a great example. Both sides of the duplex are occupied, producing $1,400 of rent income on a $139,900 purchase price in a neighborhood that's not beautiful, but it's safe and it can attract respectable tenants. In fact, how we help you here at GRE is with completely free investment coaching at gremarketplace.com/coach. If you think you're ready to add income property to your portfolio, our coaches, Naresh or Andrea, what they will do is they will learn your goals. That's really where you need to start. And they'll find you the best off-market deals nationwide that make those top long-term buy and hold income properties that an experienced manager manages for you. Have that manager's expense built into your cash flow analysis. Okay, and that's how I do all of my buying in the Midwest and South. And here we have relationships with proven property providers, many of whom we buy from ourselves. And your coach can also help write your offer if you would like that. Submit earnest money. Navigate the property inspection. I recommend that you get one of those to protect yourself. Interpret your appraisal. Check your management agreement. I mean, after all, your property manager is what makes this investment passive for you if you choose a property manager. And overall, your coach just helps ensure a smooth closing day for you. Your investment coach can do more than this, and if you prefer, they can do less than this. And you want to get another income stream regardless of what the future of the economy is going to be. But amidst high inflation, you want to get out of dollars and into real assets and fixed rate mortgage debt. Our website, GRE Marketplace, is where the coaches source the properties, and it's really more like an organic farmer's market than a big box store. Property offerings change frequently, and because there are limited slots available to talk with our coaches, I mean, it is their zero-sum game of time after all. You can talk with them through the phone or Zoom. It helps if you've got your down payment and you are ready to go. I mean, sheesh, if it were any easier, your coach would even make your down payment for you. I don't think they're gonna quite do that. So this really ought to help you. And did I mention that it's completely free? So to get started, choose your coach and book a time. I think you'll find it really valuable. Start at gremarketplace.com/coach. I'm Keith Weinhold. I'll see you in the next video.